Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
What is driving the market right now? We'll talk about Bitcoin, but as you can see over my shoulder, the rally from the last 2 weeks got us as high as 98K, basically, fully retraced.
Yep.
We're back in the 87, 88 range again. We'll talk about that in a minute. Broadly, as you stare at your screens today, what is driving markets?
So I've spent the last 2 days probably harping on every single word that Trump says in relation to Greenland, and I think that is squarely what the market is focused on. There's some stuff going on with Japan and their bond market, but the biggest driver of risk sentiment right now is, are we headed for some kind of either economic confrontation or a real confrontation with Greenland? It seems like Trump this morning at Davos put the military stuff aside.
De-escalated it
De-escalated it from the military stuff. And I think what he said was, we would like Greenland. If not, we're not going to be happy, insinuating that there's going to be some consequences. And just recently, like 20 minutes before we started filming, Denmark, their prime minister, refused to negotiate with Trump over buying Greenland. And so the pushback from the Europeans is still pretty aggressive.
Mm.
And, when you had the initial, de-escalation event by Trump this morning, market ripped, S&P was up, up over 1%. And since the Danish comments, we've retraced a lot of that move, hence why Bitcoin went from 88 to 90 and then back down to 88. But again, this is price action in BTC that doesn't leave a lot of inspiration, right? If you think about it, like we went from 98 to 88, and it wasn't really on much. S&P sold off like 2%. And the question is, like, even if the market recovers, will Bitcoin recover that quickly? Because you just liquidated a bunch of people that were getting optimistic for the year, and now Bitcoin's like down year to date. And so it just feels like there's not much to play for if we're like, oh, we're probably going to stall, below 100 or right around 100. So why are you buying, an asset that doesn't have that much upside to it in the context of like its risk profile?
Well, you mean it came down for no particular reason? It just, the rally stalled before 100. I mean, and it's so in that sense, everything in the last 2 weeks with Bitcoin going from 87 to 98K, it's just range bound trading again. It did not fundamentally reset the trend in any meaningful way.
But I think, for Bitcoin in particular, it's a very reflexive asset. And so once you start going up, it's a little bit easier to go up. But once you start going down, it also works in both directions, as we've mentioned. And the DATs are under pressure. Sailor's still able to buy.
He bought a big chunk. One of his biggest in
$2 billion. Yeah,
I don't know when, since last
95.
winter.
It's at 88.3 right now.
Yeah.
And so there are some questions in terms of how sustainable is that, particularly if you start to dip meaningfully lower. And in my head, we're still below the 50-week moving average. The setup still targets a move to the 200-week.
It's the same setup.
Same setup. And you had a retrace from 80 to 98, which, in bull markets and bear markets, 20% retraces.
You've been saying this, to be clear.
Right.
We're in a structural downtrend. There'll be movements throughout.
There'll be movements. And that's what you're seeing now.
And you haven't seen anything to change that structural downtrend.
Absolutely not. In fact, this type of price action is what deters people from Bitcoin. Another wave of liquidations after you start to get some hope. And it's I could go buy NVIDIA, or I could go buy Mag 7. I could buy gold up 2% in a straight line.
Let's talk a little bit about gold.
Yeah.
Because it's one of the only, I'm going to say it's a security in the context of a Bloomberg terminal. It's obviously a commodity, but it's one of the only tickers on Bloomberg where they have 120 years of price data. And I was looking at the all-time price chart of gold. And of course, relative to the magnitude that it's had in, recent decades, for, decades in the beginning of the price chart, it looks flat because the movements are small relative on an absolute basis. Then you have in the 70s, right around 1971 and the Volcker era of inflation, a big run up, right? Then you have a big run up again in the 80s and 90s, and then you have now, which literally looks parabolic now. Again, when you look on that big of a time scale, it's literally just roofing almost at $5,000 an ounce. What does this say about the global economy, just at the highest macro level?
I think it's we just
87.5.
broke 88. I think what it says is that folks are really worried about the long-term debt profile of the world.
Yeah, I was
right?
gonna say
and it's just math, and it's catching up to folks. And then at the same time, like there's a big push to weaken dependence on the U.S. from allies and from non-allies. And so, how do you preserve wealth in that scenario? How do you manage reserve assets? You lean a little bit more into gold. That doesn't mean that these allies aren't going to still stay invested in like the most dynamic economy in the world. Like, don't get me wrong. It's just more like the incremental stuff is leaning, a little bit further away from the U.S.
Gold just looks more attractive.
More attractive.
I mean, if you wanted to, let's say you're saying it's incremental, and I think that's right. It's obviously not like a wholesale dumping of U.S. equities or even treasuries, although demand is softening on the margin. Like, if you were to look for an alternate denominator, is that basically your only option? It's the other fiat currencies.
No, gold is what people should peg themselves first, because it is the oldest money around.
Yeah,
and it's clearly working, and it's accepted globally, right? Like every single culture outside of the U.S., for the most part, like heavily invests in gold,
like loves gold
as part of their culture.
Yeah,
right. And so, like, it's really hard to not measure wealth creation in those terms, or wealth preservation, most importantly.
Right.
I think the biggest risk to markets is, runaway inflation and devaluation of the assets you currently own. And so it just looks really good.
Yeah.
And then you have central banks that print fake, useless money to buy real gold.
Yeah. It's good.
So yeah,
good business to be in.
Yeah, I'll tell you this: every 100 points it goes up, I feel shorter.
Yeah, I hear you. All right, Beimnet Abebe from Galaxy Trading. As always, thank you so much.
Thanks for having me.